Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, April the 22nd. Well, with the Easter long weekend now behind us, the markets are turning more towards the weather. And it's not for the faint of heart, as they are getting quite volatile. As the cold, wet weather delays planting, the markets push higher. And then, as the skies clear, the markets reverse and pull back. Drought concerns continue to support prices, and in these volatile times, one has to stay focused and disciplined. There is a lot of news out there to distract you, but in the end, the trend is up. Now, with the May contracts into their final weeks, we'll now switch over to following the July future contracts. So that said, the July canola contract this week was up $29.20 a ton, and it closed out at $1,171.70. The canola, it did chop around to start the week off, but then it surged higher on Thursday and Friday today, supported by the Indonesia's decision to ban palm oil exports as of April 28th, that's next Thursday, in an effort to control the domestic cooking oil prices. The July soybean contract was up as well on some of that news. It was up 23 cents for the week, and it closed at $16.88. The July corn contract, well, it managed to gain a little bit. It goes up a nickel, and it closed out at $7.89. The Chicago wheat contract, though, it was down a little bit this week. It was down 30 cents over the whole week, and it closed at $10.75 a bushel. The Kansas City July contract was down this week. It was down only 7 cents, though, and it closed at $11.50 a bushel. While our Minneapolis July contract actually led the wheats higher for the week, and it finished higher. It was up 16 cents for the whole week, and it closed out at $11.63. The winter wheat markets were lower this week as the export sales continue to disappoint, leaving many to believe that USDA will now need to raise U.S. ending stocks once again. As well, the higher U.S. dollar is keeping wheat uncompetitive on the world market, and with both Europe and Russia wheat production poised to be bumper crops next year. Spring wheat, however, it did manage to finish the week on a positive note, with the late seeding concerns in the eastern prairies and the dry drought conditions that we see out west. Our Canadian dollar this week, well, it tried to push higher. It was up by the middle of the week, but then it just turned itself around here in the last day or so, and it closed down 61 basis points on the week and closed out at 78.67. Leading that lower movement was crude oil. It lost $4.40 for the week, and it closed out at 101.98. The next week, while we are headed into the last week of April, the planting in the U.S. Midwest is getting underway. However, the northern plains and the eastern Canadian prairies are at least 2 to 3 weeks away, with further delays possible. For canola, we're going to look for the July contract to get up into that $1,200 area. And we're going to look for that new crop November contract to work its way into the $1,100 area. Spring wheat prices, well, the trend is still up. And we'll look for these prices to retest the recent highs at $11.80 with a push towards that $12 mark. I'm Ed Baldwin with your weekly wrap-up for Friday, April the 22nd.